Well, John, we're back in studio. Another episode of The Insider. I have a feeling we might make this available for everyone because there's a whole lot to talk about here, and it's not all going to be inside information, is it?
No, no, actually, finally something in the markets other than nothing. Look at wheat. Wheat's pulling corn up. Corn, you've seen how corn's wanted to act. 72% good to excellent. That's where we were this time last year. Last year was a big crop. This one's got a lot of rain. One could say too much rain, but we're coming up in price, and that's what makes it exciting. You finally have something other than the markets that we had. December, what did we make it up to? 444. Last time we got excited, it was 450. But then you look at some of the deferred stuff. You're up there near 460 for March. You put another 10, 15 cents on this thing, and then that really lights a fire under everybody to at least start looking at what we might be doing. And I think I've talked about synthetic puts, which is basically you're short the futures and then you're long a call. And this is maybe shaping up into a market that we might be looking at that. We also have the wheat market, which is, call it the Russian problem with their one of their regions under heat stress. And then we have too much rain on the Kansas wheat, which we talked about a week and a half ago, that constant rain. So is the wheat short covering? Is it the beginning of something special? We were the lowest price in the world, and now we're coming up to, awfully fast. The last 3 days, what was it, up 25 and held all the gains on Friday. I'm all mixed up because we have the broken up week here. On right. Wednesday.
Yeah, I looked at wheat yesterday and I saw 25 cents and it was green.
Yeah.
And I thought, am I looking at cattle?
Yeah.
No, that's wheat, but notice corn was barely dragging along. So what's going on there?
Corn was up 5, and then beans had been leading with the biodiesel. So all of a sudden, you're getting some news to move markets. That's what we've sorely needed, and we finally have it. And then this is where we come in. This is where we start going over numbers, calling guys, start looking at strategies that we want to be a part of. So far, I've only leaned on just the put side of stuff, giving this room to rally, and I like to buy a lot of time. But when you look at a synthetic put, basically what you would be doing is you'd be buying a call just in case the rest of summer something pops up. You pick your time frame, like you pick September, and we'll just do some easy math here. So you look at September, and I'm going to pull up the option really quick. The futures are at 429, and then you look at a 430, and we're at about 17 cents. And you don't have to go right at the money. You could go to a 440, and you'd have 10 extra cents of risk to the upside. So you'd buy that for 14 cents, short the futures, and then the futures would have to go down more than 14 cents eventually for you to capture gains. Now, why would you use this? You'd use it in a market that looks like it's going to go down with the corn crop coming along very good. The ratings are very high, but you still have weather threats that could change things really quickly. You have politics that could change things really quickly. So you look at this strategy when you want to protect the upside in a shorter time frame, but still longer term want to be short. Is it ideal? No, I'm not saying run out there and do it at all. This is just something that we're starting to track. And if it gets to levels that look reasonable, that's something that one could do. One could just buy a put. One could sell a call and buy puts. One could market as grain and buy calls. There's a lot of different combinations that a guy could look at here, and that's what we're going to be doing over the next week.
Yeah, and the positive is that there's actually opportunity to look and do that. We can maybe get off our hands and start making some moves as these prices do change here.
Yeah.
I would say, you touched on it, but soybeans being the leader, they look good, and the price does not look bad to me. I don't know what, each farm's different, but what are we at, 1060 something for November beans?
Yeah, I got two, one text and one call on should I market beans on Wednesday, so you can tell guys are thinking about it. Or should I market beans and buy a call? Should I just market? So you're starting to get to numbers that make sense for some guys. We have a lot of summer left for soybeans. It's not the same as corn. corn, once it gets through pollination, they tend not to worry about it a lot, where beans can burn up in August. So beans look healthy, wheat suddenly looks healthy, and corn's being drug along, still bear spreading heavily, which I believe is a huge warning sign for what's to come in corn. Some say it's being manipulated. I think there's a little bit of both. They're going to get that last of that cash corn old crop for nothing. And it had wonderful demand the whole time. So where does that leave corn? Well, it's so far getting pulled up with the rest of it, and leaves it very vulnerable. So I hope we don't just go up to that, almost kiss that 450 like we did last time, and then immediately fall away. We're hoping that this builds on something. Some guys will just market at their local elevator, hedge to arrive, or however they arrange it. They might be doing accumulators, whatever they're doing. So you don't have to do it on paper, but it's at least something's moving enough to where you can manufacture a price if you get creative by being out with a carry in the market. You're starting to get to profitable levels, and that's a big difference than what we've been seeing. Sitting at their 420 and just sitting down there under the cost of production, watching it kind of trickle down every day is not a real fun market in the summer, and that's not normal. But finally, we have something different to talk about.
Yeah, absolutely. Speaking of different, and just in time for, I think I'm making long drives the next 4 weekends, maybe even the next 5 weekends.
Yeah.
And just in time for oil to be a rocket ship up. Oil looks like cattle lately.
Yeah.
It's non-stop. Do you have any thoughts on the crude oil market or diesel? What are we doing here?
Obviously, the Middle East, the natural gas has been affected. The oil, and if you're oil short, it's really hard to go home over the weekend short the energies with what's going on in the Middle East. All eyes are on that. Now, that being said, the true fundamentals of oil is not bullish. There's plenty of oil around. It's getting better, but it's still that risk premium, and there should be a lot of risk premium. So you could wake up and it could be up $10 the next day, depending on what happens overnight in the Middle East. So we are, at least markets are moving, like oil, like you said. Not that we're all cheering for it to go up. The dollar's been going down, oil up, which kind of puts a bit under grains. And we've talked about this. The markets tend to change faster than you think for reasons that you can't predict. And we're sort of going through that. So you have the energies being affected by that. Everything, really. The stock market didn't like what it saw. What was it down yesterday?
I didn't see what it was down yesterday, but Dow was down 400 today.
Yep. So it doesn't like, it's down 413 on everything's closed, but the Dow futures are open. And it doesn't like the talk of the U.S. getting involved. So you have that market moving, and just completely different than 2 weeks ago. Suddenly there was nothing going on, and now there's all kinds of news between the biodiesel news for beans, the wheat, all this massive short covering, the energies with what's going on in the Middle East, and you're looking at a volatile situation, which is going to make grain marketing sort of unpredictable, but hopefully you can come up with the strategies that take a little bit of that out of there. Like, when we talked about the synthetic put earlier, you have your upside covered and you have your downside covered. So you have a strategy that is flexible like that. You're just trying to think outside the box. You're trying not to spend money you don't have. Like, you're not just buying calls if you're raising corn. Courage calls, we've talked about that, but you don't want to, the margins are so thin here, you got to make smart decisions in probably very small windows, and hopefully we can help with that in the coming days.
Absolutely. That's the biggest advantage is things are happening. We should look at your metal markets too, because silver had a great day yesterday, and not so much today in the trading that they had earlier today.
Yeah, the metals are always volatile, and it's been in a steady uptrend since April? I think gold, silver, platinum recently. So you get metals on the move. The problem is getting involved. One would say, why don't you just buy gold and hold it? And you can. There's micro gold, there's 33-ounce contract, and there's a 100-ounce contract. I don't know. I think part of it's the Bitcoin and some of these other markets, which there's Bitcoin futures, but some of these other markets I think have taken away some, like the younger generation. They're not as focused on gold and silver as maybe 50 plus or 40 plus. I know a lot of people like physical stuff, but the metal markets have lost their luster a little bit to Bitcoin and that kind of stuff. These alternative investments. Otherwise, they would be front and center in the news, but they've been in steady uptrends. Markets are moving. Generally, that creates opportunity. It has not been real predictable, and we haven't had a lot of opportunities. I'm even starting to track some of these March calls. 520s got up to 10 cents. You start getting stuff up to 15, 20 cents. That's reasonable for, if you got up there, you would be hedged at those levels. We're dealing with this super low implied volatility, so it's hard to sell options, but it does work with the synthetic put. But at least we're doing something different, and we might be at profitable levels that we can lock in soon. It could happen really fast, and really you just need to get ready for what your plan is.
I love it. I love that there's ideas out there.
Yeah. I mean, it's not been fun sitting around for a month and a half, generally at a time of year where you have too many ideas and the risk is high and the price is high, everybody's profitable, and you're just simply choosing your levels and your strategies. We've had none of that this year. It's basically gotten planted, and we've had perfect weather, and that's another thing that's running in the background. This could go to levels that you don't even think it could make it to really quick. But it's going to be hard for corn to stay up there as long as the rain keeps happening. Sure, on Twitter you're going to see pictures of the windswept fields. That corn's probably going to stand back up. You're going to see hail pictures. Every year it's going to look like something really bad's happening. But I get a pretty good feeling on the phone talking to a wide variety of people what's happening out there. There's not a lot of complaints. Not enough heat, but now we have heat on the way. Then there's supposed to be rain behind it. As long as that pattern continues, these are going to be selling opportunities unless it's outside markets that bring it up. So that's why you want to start planning for that. And be it just at the elevator, be it here or a combination of it, just start planning. And that's really the guys that come out ahead are the guys that make decisions in these small windows this time of year. And it always looks easy looking back, but it's never easy because you're going to see those scary pictures on Twitter. You're going to hear your cousin in Nebraska saying it's burning up. You're going to hear a lot of things, and that happens every summer, but the consensus is this is going very well. Have you heard anything different?
I haven't, and the driving I've done so far, it looks great.
Yeah. North Dakota pictures I've seen look wonderful. South Dakota I haven't seen too much of. I haven't heard anything bad. Minnesota obviously looks really good, and it's going to be really interesting to see what happens after all this heat. I think everybody needs it. I mean, there's going to be spots that don't need it, that have missed all the rains, but that happens every year.
I realize this doesn't correlate 100%, but my new grass seed is growing the best I've ever grown grass seed. So
all I do is mow. That's all I do.
Yeah.
I for one, wherever all I do is sit on a mower or push a mower at the cabin. But it is grass growing weather.
It really is.
And if that's going to spill over to the feed, we haven't even got to the cattle yet. The cattle has a completely different look.
Yeah, what's going on with cattle?
So we had $5 lower cash trades so far this week in the north. That sounds scary, except for it's been going up $8 or $9 a week. That is not much. So $235, but it's still the first step back that we've seen. The consensus, and everybody's saying that box beef prices aren't sustainable. Cattle's not sustainable up here. So you get your sell-off. Now, the $1 million question, is this real or is this just another pullback?
Opportunity to buy on sale.
Generational.
Cattle are on sale.
The cash market really hasn't been bad. The futures have not wanted to go up for about 2 weeks now. Mm-hmm. They had a little update here on Wednesday. I'm getting confused because of the holiday. And they look like they're struggling futures wise. The cash has won so far. So now it becomes an unhedgeable board because it could explode higher, but it is futures. It's looking to the future and saying, hey, cash is topped out. We're pricing it accordingly. What my big clue on what the market really believes is that June contract. I was very surprised to see that down $3 or $4 I think it was Tuesday. And that's the one that only has, 10 days to square up, or 15. Well, look at that. Yeah, about 12 days to square up with that, converge to some degree. So to see that one go down, that would tell me that's not where the speculators are. That's where the guys on the commercial side are, either short hedged or, the long and they want the cattle. So that one coming down is probably the biggest warning sign that I saw. They must feel like this is a little bit more of a real move in the cash market with maybe more to come. There's a lot of analysts that have been saying this for a while. They've been wrong for a long while.
Absolutely.
We've been watching it go up in wonder on just complete and total demand. Then you hear the talk about, well, the herd hasn't even started rebuilding. They're going to have to retain the heifers. And that's what makes baby cows. And then it's going to get really tight. So you still got that bidding at the sale barn. Eventually that won't matter what happens. The futures are just going to go down. The cash is going to go down. All this is true. Then you hear the 2-year cycle. It can't go down, or it's not going to go up. But you got a lot of speculators in there for a very long time that have been long with a lot of profits. Anything's possible in the short term. But the point is, it's a very different looking market. It's got a different feel. It dips, and the buyers just aren't there. The cash market, we'll see if more cash breaks out here today or tomorrow. But so far in the north, it's been $5 lower. And look at this. I mean, we're just burning up time. We actually have a lot to talk about because markets are moving, things are happening, things are changing, and we're getting back to the old commodity markets that are more the norm than what we've been going through for the last 2-3 months.
Gotta love to see it. Well, we should wrap up there, John. It is an insider. We're
Yeah.
generally a little shorter, unless you have something you must add before we call it a day.
No, I'm free as a bird today. I mean, there's not too many people trading the indexes and the crude oil, and that stuff is open. But no, I'm ready to leave, and that's my plan.
Love it. Do you want to leave your number?
Yeah, 218-731-1578.
Thanks, John.
Sure.